Be sure to hit that like button and subscribe so you don't miss this deep dive into the potential ripple effects of President Trump's tariffs on goods from Canada, Mexico, and China. These tariffs are sending shockwaves through the U.S. economy, particularly in the construction and housing sectors. The uncertainty surrounding these tariffs is already fueling fears of a potential recession, especially if a tariff war erupts. You might be wondering, what exactly is a tariff war? Well, imagine countries going back and forth, each raising tariffs in retaliation. It's like a dangerous game of economic chicken, and the consequences could be severe. In fact, we're already seeing the stock market react negatively, and financial experts are advising everyone to take this situation seriously and brace for potential economic instability. The tariffs are expected to increase the cost of various construction materials, including lumber, steel, copper, and even things like nails and flooring. To understand the impact, consider this. A significant portion of the lumber used in the U.S. comes from Canada, and steel is a major component of commercial construction projects. Experts predict that construction costs for both residential and commercial projects could rise significantly. Now, this price surge has serious implications, especially for nonprofit organizations working tirelessly to build affordable housing. Increased material costs could lead to project delays or even cancellations, which could further exacerbate the already critical affordable housing crisis. This means that the dream of homeownership could slip further out of reach for many families, and those who rely on affordable housing options may face even greater challenges. But it doesn't stop there. The rising costs of construction materials will inevitably push up home prices and rent across the board. This will disproportionately impact low-income and fixed-income households, who are already struggling to keep pace with the rising cost of living. Imagine seeing your rent increase while your income stays the same. It's a recipe for financial strain and hardship, and the impact extends beyond housing. Las Vegas, a city heavily reliant on tourism, is particularly concerned about the potential negative effects on the hospitality industry. Millions of tourists from Canada and Mexico visit Las Vegas every year, and there are worries that these tariffs could discourage travel and spending. This means fewer tourists filling hotels and casinos, less money flowing into the local economy, and potential job losses in the hospitality sector. From construction workers to tourism employees, the ripple effects of these tariffs are far-reaching and impact real people's livelihoods. Businesses across a wide range of sectors, from construction and floristry to even brewing, are grappling with how to manage the increased costs due to tariffs. Many are facing a difficult choice: either absorb the costs themselves, which could hurt their bottom line, or pass the cost on to consumers in the form of higher prices. In Lexington, Kentucky, home builders are echoing these concerns. With a significant portion of their lumber coming from Canada, they are anticipating increased costs that will ultimately be passed down to homebuyers. Experts advise new home buyers to have frank conversations with their builders about how these tariffs might impact the final price of their homes. Meanwhile, the Central Valley in California, a region experiencing a boom in new home construction, is also bracing for the impact. With about 70% of imported lumber coming from Canada, along with other essential materials like steel and copper, the cost of new homes is expected to rise significantly. This comes at a particularly challenging time for Californians, as many are rebuilding after recent wildfires and natural disasters, further increasing the demand for construction materials and potentially driving up prices even more. The uncertainty surrounding these tariffs is a major concern for businesses and consumers alike. The situation is fluid, and the long-term effects remain to be seen. While some experts believe the impact will be temporary, others warn of a potential domino effect that could lead to broader economic instability. It's a stark reminder of the interconnectedness of the global economy and how policy decisions in one country can have far-reaching consequences. And the impact of these tariffs extends far beyond construction and housing, affecting various industries across the board. In Kansas City, businesses like flower shops are feeling the pinch. With flowers coming from Canada and various goods including vases sourced from China, the cost of doing business is rising. Shop owners are trying to find ways to mitigate the impact by searching for alternative suppliers, cutting costs, and preparing for potential price increases. Financial experts advise consumers to take these tariffs seriously and plan for uncertainty in their budgets. These tariffs are already affecting the stock market, and concerns about job losses and rising costs of goods and services are creating anxiety among many. In Sioux City, Iowa, construction companies are also grappling with the uncertainty. Lumber from Canada and steel, major component of commercial construction, are expected to see price increases. While some companies are trying to absorb the cost to maintain stable pricing for their customers, others warn that price increases are inevitable. These tariffs have introduced a level of unpredictability in the construction industry, making it difficult to estimate project costs accurately. In Seattle, Washington, the lumber and brewing industries are feeling the impact of tariffs on Canadian goods. Canadian softwood lumber already faces a 14.5% tariff, and the new 25% tariff will bring the total tax to nearly 40%, potentially adding thousands of dollars to the cost of building a new home. The brewing industry is also facing challenges, as many breweries rely on Canadian malt for their beer. The tariffs on Canadian malt are forcing brewers to make tough decisions: either absorb the increased cost, potentially hurting their profits, or pass the cost on to consumers by raising beer prices. Some businesses are exploring ways to mitigate the impact of tariffs adapt by seeking alternative suppliers or finding ways to cut costs. For instance, some brewers are searching for domestic malt suppliers after losing their Canadian source due to tariffs. This situation highlights the interconnected nature of the global supply chain and how policy decisions can have unintended consequences across various industries, ultimately impacting consumers' wallets. The potential consequences of these tariffs are far-reaching and complex, affecting industries from construction to tourism and ultimately impacting your wallet. While the long-term effects remain to be seen, it's clear that these tariffs have introduced a level of uncertainty and economic vulnerability. Be sure to like and subscribe for more deep dives into complex issues. What are your thoughts on the potential ripple effects? Let us know in the comments.